Before the break, I actually give you the illustration for two cases. Illustrate to you how business process for the revenue, right? Business process for the revenue. And we stop over here. Why do we need the proper? Why do we need a proper procedure? This one can be anything, you can just think up from your brain, alright? the best answer you can think of is to make sure that everything is recorded and captured, alright? But that's the thing, alright? That's the main point. But in the answer in the exam, you must be specific to the case. The case might give you, for example, over here the case of the business, cafe business, alright? Then you need to state according to the case, alright? So we move down over here, alright? What is the risk of not having, alright? So the risk of having and the risk of not having, alright? The risk of having. The reason why you need a proper flow, and then what is the risk? Risk over here, it actually goes back to the risk of this one, alright? We will cover this risk and the fraud in the chapter 10, alright? In the chapter 10, you have covered it much more deeper. But over here, what you can think of is, if you don't have a proper system, number one is automatically what will happen if you don't have a proper system. Yeah? You got someone over there? Maybe you can, what's your name? Yeah. Huh? Alia, right? I remember I asked you before. What you say just now? You're right? Yeah? Chaos, right? Chaos. You will have a chaos, and everything will not be in order, right? People will be running here, running there. Where to? The thing is like this, alright? Process is like this. When you think about process, it can be in any process. Like you go to the administration to, let's say, register costs, alright? And then there is a process. So if you don't follow the process, if there's no process, then it will be chaos, right? Everyone running around. And the risk of having not everyone is chaos, one of it. And over here we can see is simply for this perspective, for the order to cash perspective, if you don't have a proper way to capture your sales, you don't have a proper way to record your cash receipt. This is very specific, right? It means that you don't know how much you earn by the end of the day. Then there might be a theft, right? Theft on the cash, alright? There might be a theft, and then you might be facing customer complaint, alright? Their sales is not being, their order is not being served. The risk over here is basically the negative things that would have gone wrong if you don't have a proper order, alright? Over here, another one over here is the credit risk. Credit risk. I'll go that in a bit. Credit risk is focusing on when the customer purchase creditly. Alright, those kind of credit purchase, you know, credit purchase for you is a credit sales, right? They purchase creditly, so for you, you are selling it creditly to them. So let's say there might be one of the customer, and then come to you and say that I will pay you later on. Can you supply me with certain product? Alright. This example, alright, is already out of this coffee business that I said just now already, right? Maybe this one is the trading business, all right? A trading business fit more into this example of credit. Trading business, you know what's trading? Trading means you buy and sell, all right? Maybe you buy like this, what do you have? Umbrella, right? You buy like umbrella and then you're going to sell umbrella. Then there's this customer come to you and say that, okay, I want to take this, I want to purchase on credit first, all right? So you will sell this to the customer and then the customer will pay you back later. Does that make sense? But you are the boss, right? Then you will have to consider how much credit you can give to this person. It's like credit card, you know? You know credit card, right? Credit card, maybe your limit is 1,000 ringgit. Then you spend until 1,000 ringgit finish, it means the credit card already used up to the limit already. You got what I mean? It's the same as you, as a business, you can sell the umbrella to another customer. You can say that this customer can buy from you up to 1,000 ringgit. Then above 1,000 ringgit, you say that, okay, you have to clear your bill first. Only you can order the next batch. So over here, risk of not having a proper order to cash cycle. It means you cannot keep track of your customer, right? You cannot keep track of how much they already purchased, and then there's the risk of you giving too much credit to that customer, and that person or the customer might just run off after that, and that's it. There are more examples, right? There are more examples. There are a lot of ideas that you can generate or think of, all right, in reality. But one thing I want to highlight is your idea or your point must be logic. It must make sense, all right? You cannot come up with some idea that is not related to the sales at all. Certainly you say that the risk of not having the order to cash cycle is you will lose your employee. Then it's totally out of the point, right? Outside of this cycle already. It went into the hire to retire cycle already. You got what I'm trying to say? Alright, that is something that you need to I need to point it out. Now over here, let me just go down over here to the typical order to cash process. Alright, just now we see over here, it's very simple. Right, order, you receive your goods, and then you pay the cash. Alright, but in a typical process, typical means the best practice, right? It means general, what you're going to see always. And this one apply mostly to the trading kind of business, manufacturing kind of business, the one that you have some product to sell to another person. And this is the typical process. In reality, when you apply into, let's say, Shopee platform, you apply into like e-commerce platform, you might see different process embedded. You understand? It might be this process come together with this process, and then the process might be embedded activities, right? We call it activities inside the process. Process is the big picture of the whole thing, but inside the process we call it activities. Alright, for example, there's order activity, and then there is receiving of the goods activity. Then there's a cash payment activities. Alright, we can point it to that context so that we are not confused. Alright, we're not confused with a lot of things. So here we have the typical process. Let me just make it bigger. Alright, we have the typical process. Okay, can you help me with this one? Alright, this one is like a typical process for, I'll just say, manufacturing. Is it correct? Manufacturing, right? Manufacturing or trading. Usually manufacturing the difference with the trading is they manufacture things, right? Means they purchase something, raw material, and then they convert, become the product, finished good, but they still do the selling, right? They still do the selling as normal. Means they have the goods now, which they convert from the raw material to finished goods, and these goods will be sold to the customer. But the trading company is they straight away purchase, all right? Wholesaler or the trading company, they will purchase from this manufacturer and distribute or sell it to the customer or another business. Okay, over here. All right, can I have someone help me with this? All right, we have typically 6 process over here in order to cash cycle. All right, and any one of you want to volunteer? All right, volunteer. Everyone of you want to volunteer? Give an idea. Or Nizam? What is Nazir? What? Nizam. All right, maybe you can try. Okay, you got the ordering. Okay, what you have next? Nizam? Inventory check, or you can say the delivery, right? The delivery process. Delivery process include the inventory check lah. You need to check the warehouse, check everything, then you can deliver the goods. Then you got invoice. So here is the, let me just use another color. Invoicing, right? You're going to invoice the customer. Then you have it is related to the invoice. What happened over here? Yeah. It is related to the invoice. What happened over here? When you issue a wrong invoice or you issue an invoice that later on come back to you, adjustment, right? There might be adjustment, and then you have the cash receipt, right? The receipt. The receipt of the cash, and then we got over here the last one is the report, right? The report. All right, give your friend a clap, right? Give your friend a clap. Okay, since you volunteer, I give you an option. Do you want a KFC voucher? But this one is not the. So it's not the one, not the kind of good voucher lah. Or you want this one? All right. I also got this voucher for singing karaoke. Yeah? You want what? Karaoke. Okay. You can come and take from me the voucher. Alright. It's free anyway, right? I got this voucher free. So thought of encouraging you to volunteer yourself to get something, alright? Just for fun. Just for fun, right? This thing is free, I got it from other place. So, yeah, just to let you all, just to make this more lively in a sense. Alright, thanks to your friend. Now we have the typical process. Okay, this one is basically what you will see. In recording the sales of your business, alright? In recording the sales of your business, you will see is, first there might be ordering, and over here the ordering might be different type of ordering through the phone, alright, through the app. Example, let's say the Zeus, alright, you can order through the apps, right? Or you can order through the counter as well. You can go into there are different means of ordering, alright? what I'm going to highlight to you. And then the delivery of the goods. Delivery of goods over here, you can start with checking the inventory. You can compare with the sales order. You can then do the, all right, it goes back to this one, right? Olden days, very olden days, they will come out with the pick and pack ticket. Same with the Shopee law, right? Shopee, you will see yourself a list, right? If you order something, there will be a list of order items in certain seller, right? Certain seller which is like fulfilled by Shopee. You see that one? Then they have like a list of item check. Those kind of lists, they call it a list for checking the item before it can be packed into the box to deliver to you. So this delivery process, it involves the part where the order information is transferred to the warehouse. Usually it's transferred to the one that collects the items to be, or the goods to be sold to you, all right? To be transferred to the customer. Then only the invoicing appear, right? With the delivery notes, delivery order, right? Delivery order, right? That's like a notes. It's like a document, right? It's a document, all right? Generated out a document of delivery order, then they might just stick, all right? You see the box, right? In the box, they might just stick the delivery order on top of the box. Nowadays, these are modern process. Those were the day where you will get the document itself, you know, like a paper. It's like a document, right? It's like an A4 paper. Attached together with it is the invoice. Now, no longer that kind of invoice. The invoice is being issued straight away, e-invoice, right? Straight away the PDF format. That is how true to the kind of e-commerce kind of sales for the trading kind of business that I highlight over there. And adjustment over here, if you, for example, in the Shopee, right? If you're not happy with the product or the product got damaged, you can call for refund, right? Refund or return. Now that's the new thing that we can see. Then from the system itself, from the app itself, you can issue the refund request, right? You can issue the refund request, and they can deal for you. However, the cash payment usually you pay during the order, right? If you say about this Shopee app, right? You pay during your order, but that is from your perspective. But in the business perspective, usually the cash will be released to them when you click on order receive, right? When the deal, everything is finished, then only the cash will go to the person, the seller. Does that make sense from the seller perspective? All right, and thereon you will generate the report accordingly. All right, your total sales or the list of the debts, the accounts receivable that haven't paid. You know, those kind of reports that will be generated accordingly. Okay, what I want to highlight over here is this one. All right. In the accounting system, all right, in the accounting system, remember just now I told you about accounting software, right? Accounting software, the one that is on top over here, the source document, where it comes to fall under which department. In academic point of view, all right, in academic point of view, usually in this kind of process, right, we have two departments that will be involved. Of course, there are more, maybe there's three, but two. All right, let's put it as two so that it's easier. We have this one, right? Sales and marketing plus the accounts receivable team. Right, let's say team now, right? Team in a business. Does that make sense to you? To complete this whole process over here, there are two teams. All right. One is the accounts, the sales and the marketing. The one that handles the sales, the customer relationship management, CRM. The one that deals with the customer, that talks to the customer, promote your sales with the marketing. And then there should be another group of the team that handles the account receivable. All right. In academic wise, all right, usually here is the break. Usually here is the break point. All right, just for your information. All right, usually here is the break point. Sales and marketing usually handle from sales order until delivery. Usually, in this sense, all right, if they are a very big company, there will be another team where we call it the warehouse team. Then warehouse team, it will not break from here. All right, you're gonna have this sales to be on this part. We got the warehouse team over here to be on the delivery, and then you will have the AR team cover up from here onwards. Does that make sense? The AR team is the one that is inside the finance. All right, this one are inside the finance department. All right. So these are the people that will handle for invoicing. They will invoice out the particular product or the order based on the sales order that has been recorded. So why is it important? Because you must not forget one of the components in AIS is the people, right? So you must know which people to be in that position to handle that process. And then you must know that the system can accommodate for that process, and it should link from this side to here, this side to here, and so on over here. And when we talk about accounting software only, all right, those kind of idea always only we intend to always start over here, right? The accounting software always start over here, just the invoice. But the ERP system or enterprise resource planning system will start from here. All right, the data will be captured from here, and you can transfer the information from the beginning until the end. This is the one that I was trying to tell you earlier on here, right? This part over here. All right, this is the part that I try to explain to you. Now, since we are in this section over here, I'd like to make it clearer. And what is the implication, all right? What is the implication? Why I'm telling you all of these things? What is the implication? It actually goes back to the accounting system, the AIS, the system. In the system, what happened is like this, all right? You might just see if you are handling this part, all right, this part over here. If you are handling sales and marketing, you might just only see sales order and quotation inside your system. You remember you opened up your accounting system, right? The other day, this week, right? Just last 2 days ago, right? You opened up your system, right? You might just only see the sales order for you to record the ordering, all right? And you might not see other functions. These are what they call the role-based control, all right? And it goes to the warehouse. Then warehouse will only do something, they will only receive the information that is related to the warehousing, the item to be picked from the ordering. And then the ARO here might not have access to the ordering, but they can transfer the information from ordering department. The information you can transfer in the system to be converted to the invoice. All right. Then go so on and so forth. All right. Any question with this process flow? Any question with this process flow? If no question, I'll go down to here is the document generated. This is another thing that is very important. I think I'm almost the end already. All right, I'm almost end already. Let me just